Okay, welcome back, guys. Welcome back to our channel. We have our guest here, Ton from the US. Is a tax expert, yeah, a crypto tax expert. Nice to meet you, Ton.
Absolutely. Yeah, you as well. Thanks for having me on the podcast. I'm looking forward to it. I think it's going to be a fun one.
Yeah, exactly. So before I gonna start with the video, can you share a little bit more about yourself and how you get into crypto for the very first time?
Yes, absolutely. So my name is Anthony Price. I'm a CPA based out of the US. I actually live in Idaho. I work with clients all over the country, fortunately, because I'm the only person that lives in Idaho. There's nobody else. So I work with clients in California, Texas, Florida, New York, literally everywhere. We can operate throughout the entire country. I actually work with a couple international individuals too, that might have holdings in the U.S., like a business in the U.S., or expats, international U.S. citizens that live in other countries, the Philippines, Indonesia, South America, stuff like that. So that's what I do. I do taxes, tax strategy, tax planning, and I have a great eye for crypto while I'm doing it, because even longer than I've been an accountant, I have been in crypto, and I actually started in 2014, 2015. Unfortunately, I don't still have the bag, because I was just goofing around. I actually learned about the deep web, and I wanted to like see how that stuff worked. And so I lost my money into some deep web scams back in 2014, 2015, thinking I was going to make $1 million. And it just did not work out. And so I finally got into crypto for investment in 2018. And it started as some ETH miners, and just purchasing ETH, purchasing Bitcoin in 2018, and kept doing so throughout the last couple of years, and especially heavily in 2020, because I heard about the concept of the Bitcoin halving cycle. And so I was lucky enough to have some foresight and kind of expect that meteoric rise 6 months after May of 2020. So that's what got me into it. And the more I learn about crypto, the more I'm really excited about what it's going to do for the future of the world. So I'm happy to have this kind of expertise in crypto related to taxes, because that's certainly a big problem these days, isn't it?
Yeah, absolutely. Now, please, guys, do not get right by not paying your taxes. Yeah, it's like a classic situation to deal with. Yeah, but since you got involved in the crypto space for a very long time, I mean, what was your aha moment? I mean, crypto aha moment when you think that, oh, Bitcoin is here to stay, it's not going anywhere. Yeah, what was the moment?
What was the moment where I realized it was not going anywhere? I mean, when you understand the concept, when you finally grasp the concept of what it does, that's when you realize, oh, there's a place in the world for this technology. There's a place in the world for this concept. Bitcoin, the blockchain. I mean, it's at this point, it's inevitable what the blockchain is going to do to the world, right? And Bitcoin, the concept behind Bitcoin of being a decentralized ledger with a fixed supply, it does have a lot of comparisons to gold, yet in many of the modes that gold has its value, its portability, its divisibility, its fungibility, Bitcoin's actually superior. And so really just understanding what Bitcoin is and then learning what the blockchain is, that immediately gave me that aha moment where I still don't feel certain about any particular cryptocurrency is going to win in the future, but I understand that the technology underlying it is going to win. And so the coins that bring the most value and are actually widely used, either by retail consumer sectors, or as like the plumbing for our financial infrastructure, those are going to be the ones that win and make the most money. So I'm really into the smart contract type technologies. I'm really into like Bitcoin and Zcash for that fixed supply, decentralized nature, something to use as a gold substitute. So that was kind of my aha moment in my current philosophy about cryptocurrency.
Yeah, exactly. Because for the longest time, gold is hardly to be moved. So that's why it's Bitcoin is something revolutionary for some people, right?
Right.
Particularly in the Southeast Asia country like ourselves, right? So yeah, it's
Yeah.
a hope for something.
And if I can add something here too, it's like in the US, we are financially privileged. And so we don't even realize how bad Bitcoin is needed or some type of decentralized wallet where it doesn't cost half of your weekly paycheck to have a bank account, to have access to this financial infrastructure, right? We don't realize how important it is. Maybe Canada now realizes how important it is to have a wallet that the government cannot go and reach in, take your funds out of because they don't like something you posted on social media or something that you did, in person, like a group that you're a part of. How great is it that we can create this technology that gives us economic freedom? There's absolutely a place in the world for that. And not only that, but it's needed.
Yeah, exactly. I completely agree. That's what I said. So yeah, that's pretty much about the your aha moment about Bitcoin. I mean, yeah, you share also about your background, right? I mean, in tax, maybe people don't get familiar with the taxes. I mean, what the taxes look like in the US, particularly in crypto taxes? I mean, is it like because recently I heard the news that the administration tried to propose like what is called again, uh, capital gain tax, and not capital gain tax,
Mhm.
but
Are you talking about unrealized?
unrealized capital gain
Yeah.
tax. Yeah, is it like make economy worse, right? Because when the unrealized capital gain tax, you need to realize your gain or losses, right? So I don't know what are your thoughts on that? So
Yeah, I certainly have a lot of thoughts on that. To
okay.
go back to the beginning, how are crypto taxes in the US? They're absolutely a mess. And if we go as far to the most egregious type of tax, which would be a tax on income that has not that isn't actual income, it's intangible income. You don't actually have it, you haven't realized it, you haven't received it. I mean, that would just be completely ridiculous. So, I think that's just a strategy where you ask for a mile and you take an inch. We didn't want to give them an inch, but they took it because it looks like a small amount compared to that mile. So they've got a lot bigger problems in crypto taxation and crypto regulation than just that unrealized capital gains taxes, which would be, again, absolutely insane because of the wild variability in cryptocurrency. But they're still just trying to figure out how to fit, this new round peg of cryptocurrency into these old square holes of securities taxes, of property, like taxes on property that you make capital gains on, or should it be taxed as a security, should it be taxed as a commodity, should it be taxed as property? They're still trying to figure that out. Still trying to figure out what the hell is cryptocurrency. What is staking rewards? What is mining rewards? What's an airdrop? What are all of these different forms of income that you can make from crypto, and how should it be taxed? Some of it's easier than, other forms of income when it comes to cryptocurrency. Staking and mining are not overly controversial, but mining could potentially be a business, or is it a hobby and passive income? Staking, is it taxed upon receipt, or is it taxed upon unstaking? There's some small things that they still need to figure out. But one thing's for certain is they are determined to increase compliance for crypto taxes, for crypto income. They are going to spend billions and billions of dollars. They could double, they could triple the budget of the IRS, and they're going to focus on two things. Number one, compliance for the most profitable audits. What's the most profitable audits? Small business owners that make less than $500,000. They don't have the money to pay for an attorney. They might have, they might need that extra $100. So they added a personal meal onto their meals expenses. So they're going to screw over and go hard at people making, $100,000 to $300,000 a year from their small business. Number two is figuring out this crypto tax compliance. Like, I agree with the people that think, oh, the IRS isn't going to be able to figure out how to track my crypto. But do I agree that that will always be the case? Absolutely not. And are they going to be able to fill it out within the statute of limitations? The statute of limitations for the US, if you underreport your income by 25% or less, is 3 years. 25% or more is 6 years. So, and that's from the point of filing your tax return, the tax deadline, April 15th. Do you think for income you made in 2022, if you didn't report it, that by 2026, they won't have this figured out? Or if it's a lot of income, 2029, do you think they won't have some sort of improved crypto tax software? Of course they will. So it's a dangerous game for anybody, especially for individuals in the US, to think that they'll be able to get away with underreporting or misreporting their crypto taxes in perpetuity. It's still going to be a mess. It's still uncertain, but one thing is certain, and that's the IRS is going to be improving the compliance. And while it still might be confusing for years to come, they don't really care. If you don't report something, they're going to start increasingly coming after people that aren't reporting.
Because that's pretty much about the unrealized capital gain tax. There's pros and cons there who say that that will make the economy worse because it not get incentivize people to invest into the small businesses or something like that. But I completely agree with you. The unrealized capital gain tax is very debatable objects, to say the least, because I think, that's why it's not the proposal is still not get passed, right? So,
Right.
just how bad it is, right? So,
Mhm.
so when it comes to like taxes itself in the US, I mean, before maybe jump into conclusion, I mean, how to not really avoid, how I can say this word. I mean, to avoid taxes legally. I mean, you have
Yes.
that Roth
Tax
IRA, right?
mitigation. Yeah.
Retirement account, right? Yeah. So
Yeah.
is that the case, or am I misinformed again?
So repeat the last part of the question again. You
The last
said
part of the
you said
question
something about
is
IRA.
like the Roth IRA. Roth IRA
A
is like
Roth IRA.
yeah, it's like retirement account for to
Yeah.
do tax free, right? So, is
Yeah.
that correct or not? Yeah.
Yes. I mean, Roth IRA is one of the greatest tax saving strategies long term available to an average US citizen. Absolutely. And I saw a tweet recently that said if the government puts a cap on your benefits, that's probably because it's a good deal. And so the fact that you can only contribute up to $6,000 a year into a Roth IRA that you then distribute tax free, that seems like a pretty good deal, because if you are able to accumulate starting now over 40 years and you don't pay any taxes on the capital gains, and then when you distribute that income to pay for your retirement, to pay for your life 40 years from now, you also don't pay any taxes. I mean, you are saving 20, 30, 40% of that entire principal amount. So that is one of the greatest tax saving strategies available within the common zeitgeist of tax saving strategies. Roth IRA, really important. Highly recommend the Roth IRA over a traditional IRA in most cases, especially when you have a long time horizon. So yeah, Roth IRA, big one. Love that.
Yeah, because that's pretty much relatable for the vast majority of Americans, right? So the Roth
Yep.
IRA is the way to go. So I mean, that's the legally to make tax, quote unquote, tax free, right? I mean, when it comes to like evasion or tax avoidance, I mean, what's your I know there's like penalty in there, right? When you do tax evasion or tax avoidance. But at the same time, when we we report our tax, sometimes is we don't do that intentionally. I mean, like there is some audit that we need to deal with, right? But at the same time, during the process, we miscalculate the thing. You understand what I mean, right? So What do you
Yeah.
thought on tax evasion versus like tax avoidance? Yeah.
So tax evasion is an intentional act to conceal or misrepresent the income that you made. So if you made $150,000 and you know you made $150,000 and you go to the IRS and you say, I only made $100,000 this year, and I'm going to pay taxes on $100,000, and the IRS receives your W-2 that says you have $150,000, so they can easily go, hey, buddy, nice try. You're going to jail. That's tax evasion. That is an intentional act. You also mentioned tax avoidance. You also mentioned mistakenly misreporting your income. I want to make clear that misreporting your income, if it's an intentional act, that's a big deal. If it's an accident, then you need to prove, or you need to show what process you went through. Who do you rely on for your tax preparation? What were your actions to get yourself to this income number? How did you make this mistake? And if it's clearly unintentional, if it's not a big deal, you're still going to have to pay those taxes, of course, and you'll likely add some penalties and interest. But if it's clearly not egregious, if it's clearly not intentional, the penalties are going to be lesser than if it's outright concealment, embezzlement, misrepresentation, fraud. So that's what would happen in the case of a mistake on your tax return. Let's talk about tax avoidance, because that's not a mistake and that's not tax evasion. That's not fraud. Avoidance is looking into the future and making decisions, whether it's entity structure, whether it's purchases or strategic deductions, to help yourself reduce the most amount of taxes as possible, whether that's accelerating depreciation, whether that's altering your entity structure. Tax avoidance is legal. The transaction, when you're doing this tax avoidance, has to have some sort of substance, so that when you have the transaction, there's a reason behind it. But if you have a reason for the transaction and you end up saving a ton of money in taxes, that's completely legal. And in fact, that's a good idea. That's smart, right?
I know. I mean, yeah, that's maybe the reason. Maybe the crypto company, maybe based in Bahamas, and something that's complicated in taxes. Is that the case, or is there something else? Or maybe because what as far as I know, I mean, in the US have in their particular companies, right? I mean, like FTX.US and Binance.US, not really based in the US actually, but based in like Bahamas or Dubai, who that is low taxes rate in there. So is that the case or something else?
Oh my gosh. At the highest levels, you see many, many cases of international tax jurisdictions to help save on taxes. Some of the strategies being illegal, some of them being completely legal. It depends on where are you operating? Where do you have nexus? Where do you have buildings? Where do you have employees? Where are you particularly providing the services? Do you actually have a building in the Bahamas that you're doing? What is the economic substance of these transactions? Are you interacting between your US company and your Cayman Islands company? Are you doing transactions at fair value, arm's length prices, right? Would I engage in this transaction with this US company if I were not a related party? If so, and you end up saving taxes because of it, great. You just made an amazing tax reduction, tax mitigation play. If not, and the IRS looks at that transaction, they're going to have some serious issues with it. So this is a really hot button topic where the IRS is going to go hard on saying, you better watch your international transactions, putting yourself into low or zero tax, jurisdictions, because if you're not playing by normal commerce rules, then the IRS is going to have issues with that. They're not going to let you just do that. Hey, I'm paying my Bahamas corporation $1 million for some personal services or some consulting when no actual work or activity happened. right? Like you need to be compensating them for services actually provided. And those services, need to be in accordance with the laws of the Bahamas, and they need to be arm's length fair market value prices. Now, you can fit a lot of great tax strategies legally under those rules. And that's what the wealthy do. A lot of the wealthy also kind of they toe that line where maybe some of what they do is not legal. And no CPA is ever going to advocate for that. But it does happen. I don't recommend it for anybody, but looking at international jurisdictions for tax saving strategies, it's proper due diligence, in my opinion, as long as you stay within the rules.
Yeah, exactly. Because that's maybe like retirement people have already in Bali to have avoid taxes and I don't understand, but this is not legal advice, guys. You can do whatever you like, and this is like
Right.
maybe just giving away information. Right? So yeah, you're right.
Exactly.
I find it interesting when you mentioned about the taxes, all of that, because I saw Robert Kiyosaki once said that you don't rich people don't pay taxes. Maybe they like Elon Musk. They don't actually. He doesn't sell his actual asset, but he's like having a stock option, right? I mean, how does it work? I mean, it's like the collateral don't get taxed, right? In there.
Yeah, absolutely. I have a lot to say about that. If I can add to, kind of your disclaimer there. To me, as a CPA, I see it as my responsibility to understand and to break down the strategies that are being used at the highest level, both legal and illegal, so that we know where the boundaries are. How can we get the best result within the boundaries? Where is the outside of the boundary? Where is the inside of the boundary? How do we always stay within that so we reduce our legal liability while also reducing our tax liability, right? So that's really, really important to me. And for, CPAs or for professionals that are unwilling to even look at the cases that have gone on or the situations that have happened for both proper tax avoidance and tax evasion, to me, that's just silly. It's naive. We should learn both the legal and the illegal strategies so that we avoid the illegal and we maximize the legal, right? So that's my perspective as an accounting and tax professional. I love what you said about Elon Musk and kind of the wealthy paying taxes. They have the best advisors. They have the most capital to deploy to trigger certain tax saving strategies. So just an example is most people heard of Elon Musk's $6 billion Tesla stock donation, right? What do you think? What charity do you think he donated that $6 billion to? Look it up, please. If someone can find what charity he sent that to, please let me know, because I've researched it and there are no conclusive answers that I have personally found. There's two likely answers. Those two likely answers are either a donor advised fund where the donors advise how the funds are used. Who's the donor? Elon Musk. Or a private family foundation. A private family foundation that Elon Musk can be the director of. So in both cases, he still has full access to that $6 billion of Tesla stock that he could be doing whatever with. He could keep it invested. He could distribute some of it so that it goes and he's using it on, his family or his finances or on some charitable purpose. Who knows? Elon Musk is probably a good guy. So those types of strategies are available and they're highly utilized by the wealthy, by the highest income, and they're able to spend money for structures and for strategies that, number one, help them pay zero taxes, and number two, also help them leverage for more money and more control and more power, right? More legal liability, more income, less taxes by playing with the higher, the advanced structures of entities and advanced structures or tax strategies.
Yeah, because when you collateral asset is comes risk as well, in between, because when you don't sell your asset, of course, when the price going up, you don't miss out on anything. But when price go down, your price your asset will forced to liquidate, right? So I don't know. It's just the way it is, and people only, I don't know. It's just something that people are really concerned about sometimes. Yeah.
Right.
Yeah, that's pretty much about the taxes and tax advantages, right, guys? It's not about legal and illegal. It's not a tax advice whatsoever. So, yeah, you can do diligence and then you can decide by yourself, and then you can, only give away the good information for you guys. So, yeah, that's
Right.
pretty much, yeah. And yeah, before we really move further, I mean, like, how you define like a taxable event. I know, I mean, in our country, when you sell crypto to crypto is still not taxable, when you directly to bank account, withdraw to your bank account, I think it's taxable event. But in the US, as far as I know, I think when you like trade the crypto to crypto, in particular, whether it's losses or gain or profit, you still have to pay those taxes, right? I don't know. Is that correct? I mean, what's
You're correct.
taxable event
Yeah, totally. You're right. That's interesting that that's how that works in Indonesia. You only pay taxes once you essentially distribute the crypto to your bank account. Honestly, that's how a lot of my clients and came to me thinking that's how it worked. When you have a trade from one crypto to another crypto, you're swapping an asset. You're trading one capital asset for another capital asset. So as convenient as it would be to not have to pay taxes while you're swapping from Bitcoin to Ethereum to AVAX to Solana to Harmony to whatever else, BNB, and then back, you have a new asset every single time where you're redeeming one asset, you're selling one asset, and now you're buying a new asset. So not only do you have, when you trade Bitcoin for Ethereum, not only do you have a reportable sale, but now you also have a calculation for the basis of the new asset that you must track going forward. Okay, so that's a taxable event. Swapping one crypto for another crypto, swapping a crypto for an NFT. A taxable event would be redeeming crypto for services or goods that you're purchasing. Of course, it's business income when you receive crypto as income. Of course, I think the crypto to crypto taxable events is probably the one people get tripped up on the most.
Yeah, absolutely. Because crypto to crypto is, yeah, even though like it's transparent on the ledger, but you don't really know, the exact calculation about the taxes, right, when you report it. That's why people maybe get wrecked when it comes to like taxes, and people don't learn by this situation. I don't know. That's the way it is, right?
Right. It is.
Yeah, absolutely. Yeah, yeah, it's quite interesting when you mention NFTs, because yeah, some NFTs are worthless, as we know, but at the same time, the rich people maybe is the way to avoid taxes by purchasing art or something, right? Because it's least taxable event, to say the least. But I don't know what's your thought on arts and NFTs in general when it comes to taxes.
Yeah, well, this may be in reference to a tweet that I put out recently. It was kind of a satirical attempt to explain a tax strategy that has been attempted before and may or may not have been pulled off. I know at times it has not been pulled off, and at times actually it has been pulled off. And so the backstory there is the story is a billionaire pays an artist $10,000 for a painting. He has an appraiser in his friend group, and he pays the appraiser $10,000 to appraise the art for $10 million. He donates the $10 million painting to a museum. He gets a $10 million deduction on his taxes for $20,000 of expense. That's going to save him, $5 million. what he spent $20,000 on it. If you're bribing the appraiser, and it's not actually worth $10 million, obviously that's not an acceptable legal transaction. But if it were worth $10 million, it's absolutely a reasonable transaction. And NFTs actually would prevent the fraud related to allowing for that illegal transaction to happen. And of course, it would allow for that legal transaction to happen because there's far more of an active marketplace for NFTs than there is for art. Right? You have bids, you have people that are making offers. You can get a much more accurate market value for NFTs than you can for obscure art items. So that's really going to be helpful. I do see a lot of NFT projects as simply being art. And if it were highly appreciated, you had significant capital gains. I mean, that's one way to save on capital gains is to donate it to a nonprofit or a museum. Even better, donate it to a charitable remainder trust where you can mitigate the capital gains. You can use the proceeds from the sale to then reinvest into other assets or annuities or life insurance so that you get payouts, either fixed or based on the income that you receive for the rest of your life until which time you die. And at that time, the art or the highly appreciated asset goes to the charitable organization. That would be my recommendation. That's something I consistently talk with clients about, setting up certain trusts for tax deferral.
Yeah, that's about your clients when it comes to like NFTs or the arts taxable events. But what about the creator itself? You know, because the creator itself have their own revenue by the what is called the rate of commission, if I'm not mistaken. What's what percentage of commission, right? When you get flipped by someone, when your NFTs get flipped or something, you get the commission rate, right? By 10% or something.
Okay.
Yeah, is that the same?
Are you talking about the royalties?
Yeah, royalties. Yeah, sorry. Yeah.
I see. Okay. So yeah, every time, if you owned an NFT project, every time one got flipped, you can receive royalty commissions, 7.5%, 5%, 10%, 15%, maybe higher than that. Think about how much money, the Bored Ape Yacht Club and
I know.
creators of
How you calculate taxes, that's
is
why,
making crazy money. So that type of property is actually intellectual property, where that income can be passive in nature. So when you create an NFT project and then release it, and now you don't have to do anything anymore to maintain its value, you just let people enjoy it, kind of like music. You can receive music royalties. Oil and gas, you can actually receive royalties for the use of your property for oil and gas. This is actually similar. People are using your intellectual property, and therefore you're receiving a payout or a commission for the use of that intellectual property, and you have to recognize income. So it would be filed on the Schedule E as royalty income, and it would be passive. It would be taxed at normal ordinary income tax rates, which depending on your tax bracket could be 0, could be 37% federally.
So yeah, that's because that's maybe some confusion from some creators to make any NFTs because they have no idea what the taxes is all about. So yeah, that's very good information if you want to start your NFT project in particular, because you have your own royalty commissions generated by the NFTs, right? So yeah, that's very much about it. So what's the tax loss harvesting? Have you heard of it, right? I mean, is it good or bad for you, or is that something that's you need to do as a maybe not as a creator, but also as a purchaser as well?
Yeah, well, it's certainly got both elements of good or bad tax loss harvesting. because if you have to tax loss harvest, well, you've got losses. No one wants to have losses. I'd rather make all the income.
Market, right? Market is happen to both direction, right? So
yeah, I'd rather make all the income in the world and have to pay taxes on it than, make all the losses in the world and have that able to offset any income in the future, right? So it's better to have income and pay taxes than have no income and no taxes. Tax loss harvesting, to have the ability and the option to do it is great, because you can get rid of positions in a loss to give you immediate tax savings. If you on December 31st have $100,000 capital gain and you're looking at paying through $30,000 on that taxable income, and you have another position that's sitting on $100,000 unrealized loss, you can sell that day, realize that loss, and you just saved yourself $30,000. Right now, you can, even in crypto in the US, you can buy right back in. You can do what's called a wash sale, and you can still have that holdings, and you just made yourself $30,000. Now you have to understand that your basis of the crypto you just repurchased is now lower. So when you go to sell, you're going to have a higher gain when you sell later. But the time value of money, $30,000 saved now, compared to a little bit of extra taxes later, and it's even less if you hold on to that repurchased crypto for a year plus, because long-term capital gains rates are lower than short-term rates. There's opportunity for tax savings. There's opportunity for positive cash flow. There's opportunity for net long-term profit, receiving money from tax loss harvesting now and investing those tax savings. So tax loss harvesting, is it good or bad? Sometimes it's a good decision, sometimes it's a bad decision, completely situational, but the option to have it, the ability to do tax loss harvesting, and as currently the ability to do wash sales in crypto is good. It's amazing.
yeah, absolutely. Because it's not about the good or bad. You guys can decide by yourself. I think when it comes to tax loss investing, this is need the kind of situational, right, to say the least, when you said before. And then this is not legal advice. You can do whatever you like. So I think it depends good or it depends on the situation, whether it's good or bad, right? So make sure you maintain on those decisions, I guess. So I think money laundering tax is, I don't know, maybe, have you ever heard of like Panama Papers or something? Yeah, because when you said before about taxes, you need to some audit to deal with that. But when Panama Papers, they get exposed by some journalists, actually. I mean, it's something that's really related to the tax in particular, because what I see is that there will be more like Panama Papers in the future. I mean, but I don't know. Maybe you have what are your thoughts on that? You understand what I mean, right?
There's absolutely. There's the Pandora Papers. There's the Panama Papers. There's the Paradise Papers. I suggest everyone look these up. And while I don't believe all of the papers have been released, because it's like the International Consortium of Journalists, they compiled all of these legal documents and tax documents and communication documents, and essentially exposed the fact that all of the elites, all of the wealthy, are using these complicated tax trust structures, entity structures, different transactions to move money around, money laundering, to save income, to save taxes, to hide assets, for privacy, for asset protection. It just exposed. I mean, it was on the hush. Everybody knew that that's what the elites were doing. Some people can, I guess, deny it, trying to be naive. But when the Paradise, the Panama, the Pandora Papers were released, it becomes undeniable that, yes, the wealthy do things to save on taxes. They do things to protect their assets. They do things to hide their assets so that they stay wealthy, so that they have legal leverage over the government, over everybody else. They are implementing these strategies, putting them in place, and everyone else is just wondering whether they're actually doing it or what the benefit or how does it actually work. We're all kind of confused, lost in this cloud where, then the Pandora Papers come out and say, hey, well, take a look at this. Actually, there's billions of dollars locked up on South Dakota trusts or on Nevada trusts in the US. There's international taxpayers. There might be Saudi Arabian princes that have $1 billion in a South Dakota trust. I'm not citing that as an exact example, but that is the type of information that you find in the Pandora and Panama Papers. You're seeing world leaders exposed for having, the British Crown for having a Bahamas corporation. Why does the Queen need to have a corporation in the Bahamas? Why do certain European politicians and European billionaires have to have these trusts in the US, in Nevada, and South Dakota? It actually exposed that the United States is one of the leaders in money laundering, in asset protection, and tax mitigation with these advanced entity structures.
Yeah, I know, but the politicians say that they are against crypto because money laundering and that. But for the longest time, they use USD, US dollar to do the tax avoidance, right? But
Completely agree.
that's something,
To reiterate, it's literally the politicians are going to say Bitcoin's just used for money laundering and drugs and illegal things. And then you look at what's the currency actually used for the most money laundering, drugs, illegal things. It's the US dollar.
Yeah, that's classic politician now. We can never argue about the politicians. So maybe they don't lose the power. So that's pretty much about it. But in the US itself, that's the point of the decentralization. I mean, they can move money around, but in the US itself, in particular, when it comes to like employment, I mean, there is sometimes when you can hire anybody on honor, right? I mean, what about the salary paid in crypto? I mean, is a taxable event also, or what's about the labor and also the owner? I mean, the entrepreneurs. Is that the taxable event? Right?
So getting paid in crypto for salary, for contractor work, it doesn't change the character of the income and the income reporting requirements. If you get paid as a statutory W-2 employee in the United States, whether it's by US dollars, pesos, or cryptocurrency, you have to have a W-2 reported to you denominated in US dollars so that the IRS knows exactly how much you got paid, right? So you're going to pay taxes. Say you got paid $100,000 salary in crypto. You're going to pay taxes on that $100,000. Now, where it gets complicated is what happens after you receive your salary in the fair market value equivalent of your $100,000 salary. What if crypto goes down to 50K by tax season, and now you have to pay 30K for your taxes, and you only have $20,000 left because the timing was off? In fact, that's exactly what happened to Odell Beckham Jr. because he got paid. Odell Beckham Jr. got paid his salary in Bitcoin from the LA Rams. He's in California. He's paying the highest tax bracket possible, and he got paid out, I want to say in 2021, $1 million. When you take out the crypto crash, when you take out the taxes, he made like 300K last year. That's the risk you run in getting paid in cryptocurrency. If you can't take that risk, given the volatility of cryptocurrency, don't get paid in cryptocurrency. It doesn't change the amount you have to pay on W-2 taxes. It doesn't change the amount you have to recognize as gross income as a 1099 contractor. If you lost the money, sucks. You can report it if you sold it on your Schedule D, but you have to report that fair market value equivalent of $100,000 as your gross income, either W-2 or 1099 contractor, business owner.
Yeah, because that's the kind of classic, maybe because the true notion of the decentralization, right? When money easily moving around, and maybe they they pay salary in crypto in order to avoid taxes as well, right? When you sell it to USD and liquidate your asset, well, maybe they will become a taxable event, but at the same time, yeah, instead of paying the taxes, you just grow your business by just quote unquote giving away your crypto to the employees. That's pretty much about the nature of decentralization business, I think. Yeah, because
Right.
they will hire people for the cheaper in Southeast Asia or something. Maybe that's pretty much about
Yeah, it
the
will.
decentralization. And then, quite interesting when you mentioned about the taxes in salaries. But is it count as does it count as a tax in commodity or in securities? Because tax in commodities and securities are completely different thing. But at the same time, you pay the salary to the employees with the crypto. So, what are your thoughts on that?
So according to the IRS, crypto is actually taxed as property.
Okay.
So it doesn't fit as a commodity where you're trading currencies, USD to, the yen to the peso. It also is not like trading stocks, although many of the cryptos that I like to invest in probably would fit under security status. It's taxed as property. Now, that does not mean you can go and do a 1031 exchange from Bitcoin into Ethereum, but it does mean that you regularly treat it as any other property that you purchase and sell, kind of like a house, or maybe some a car or any other kind of property. You have a basis when you purchase it, you have a sales price. When you sell it, you pay capital gains on the difference. You can reduce by selling expenses or purchase fees, but it is taxed as property. And thank God it's not taxed as a security. Otherwise, you wouldn't be able to do the wash sale rule that I touched on earlier.
Yeah, so it's counted as what is called property taxes, not commodities, not securities. I completely agree, but that's something. But when Bitcoin reach hyper Bitcoinization or mass adoption, maybe the rule will change, because they use on the day-to-day basis. So I don't know, but for the moment, I think it's still taxed as a property, but we can never know about the future, right? So maybe subject to change, right? So
Hopefully, hopefully they'll make its own category. Hopefully they make an individual category for crypto, because it is not like securities, it is not like commodities, it's not like properties. It is crypto. It's its own thing.
Yeah, I know. Because maybe for a moment, at the moment still, they have no idea whatsoever. But as time goes by, I think the rule will change. Is also the nature of crypto approach. The crypto approach is also changed. So it's only a matter of time, right? So for that happens. So, but is it applied also to airdrop, a miner, or swap token, something like that? Is that applied to the same tax property taxes, right?
So it's treated for income tax purposes as property, but it is not treated as land for property tax purposes. So you're not going to pay any property taxes on crypto.
Because airdrop and something in related event will call as a taxable event as well as a property taxes. That's pretty much about it. So before I wrap up this podcast, really just for fun, no financial advice, do you have any specific target of Bitcoin price prediction? Maybe, yeah, 100K or 200K for the next 2 years, not yeah.
For the next 3 years?
Yeah, you have any specific target of Bitcoin price prediction? Maybe, yeah, because right now still, it's just for fun, just for fun.
All right, I'll do something for fun. I'm going to preface by saying I'm going to be 100% perfectly accurate with my prediction, and anybody that thinks I'm wrong is wrong themselves. So here's the perfectly accurate prediction of exactly what's going to happen in the future. We're also going to go buy lottery tickets after this and put in a couple sports bets on who's going to win the NBA championship and the Super Bowl this next season. But I'm going to say, trying to use a little bit of estimates and calculations here. The top of the previous cycle was about 60,000 or 69,000. It went as low as Bitcoin went as low as what, 4,000 multiplied by 15. Bitcoin was at what, like $1,000, and it got up to $20,000 in the cycle before that. So now it could get down as low as, $20,000, $10,000. Let's say multiply that by, I'm going to say $200,000 within $200,000 within 3 years. Yeah, 200,000. Say again?
Yeah, within 3 years, right? I mean, by 2035.
Within 3 years. So what made me the most money in crypto so far was actually predicting, and not even predicting, because it's not like I forensicked this out. I just watched videos and it made sense to me. The halving cycle for Bitcoin. I mean, the rate of new supply gets cut in half. So how do you maintain the price if price is a function of supply and demand, and the rate of increased supply gets cut in half? Then what happens if demand stays the same? Price increases. Basic economics. That's how I made money in 2020. I invested a ton of money into Bitcoin because I expected something like that to happen. So while we're in the middle of uncertain economic times, if we can just keep the current prices based on current supply and demand, and May of 2024, the supply rate increase is going to be cut in half. If the demand stays the same, what's going to happen to price? 2.5 years from now, it's going to start shooting up. So I don't know what's going to happen with the general economy in terms of inflation, in terms of economic, monetary, fiscal policy. But long term, I'm very bullish. And while it could crash again heavy and hard over the next 6 months, year, I think 2-3 years from now, we're going to see another surge, and then another crash, and then another surge. So I'm going to be invested. I'm going to put a lot of money into Bitcoin and a good amount of money into some other altcoins that I believe in, primarily focusing on smart contract technologies and maybe a couple other of those, plumbing coins. And somebody with a serious systems engineering background and computer science background can feel free to make fun of me. But based on my understandings of economics and finance, based on what I believe in and the theses of the assets, that's my investing strategy and my belief as to what might happen with crypto long term.
Yeah, because Bitcoin is like, number one technology. Yeah, because
Exactly.
it's basically designed that way. So yeah,
Exactly.
So yeah, I think that's
Agreed.
it for today. Thank you for your time. It's been an honor to be here, guys. If you're interested in the Ton's project, I will share in the link description. Leave a like and subscribe to our channel.